Good morning, everybody. It is Friday, May 3rd, 8:46 a.m. Thank you again for being here on another Market Open. We've got some jobs data, and that jobs data, quite frankly, is exactly what the market needed as we are experiencing some stickier inflation. And the jobs data is giving us a pretty strong green candle across the board. Jobs data is going to be the big story of today. I mean, it broke literally 15 minutes ago, which is why you're seeing these green candles. We're going to talk about Apple, what they did yesterday, their earnings, their buybacks. Actually, the jobs data coming right after Apple had not a great earnings, but they announced things that justified that they were going to have a good earnings. That's actually really good that it happens in tandem with each other. And then we have to talk about a bunch of other macro stuff that's going on today, along with a bunch of earnings that happened yesterday, Coinbase, DraftKings, Square, etc. So jobs report is the big news for today. Thank you, everybody, for being here. And apparently the jobs report came in much better than what the market expected. So let me just pull up the stock market charts real quick, and then we'll look at the actual jobs numbers. If you can see right here, S&P 500 is up literally 1.12% in the pre-market. I mean, again, moving the S&P up 1%. It was up 0.94% yesterday. So we're up 2% in the past 2 days. Not easy. Not easy at all to do. Alibaba had a 6% day yesterday. Now it's up 1.46%. Palantir is above 23 for the first time since April 8th, 23.40, up 3.75% in the pre-market. Coinbase was down like 4%. Now Coinbase is down 1.86% because this green candle formed as per the jobs report. So it's helping stocks that even had a rough red candle from the earnings that they ended up dealing with. Bitcoin, wow. I actually did not see this. I literally did not. I did not see Bitcoin today. Bitcoin's back above 60,000. Bitcoin was at 59,000. Look at this. Bitcoin was at 59,170 at 8:30. It is 8:48. Within 18 minutes, Bitcoin has gone up 2%. And we've psychologically crossed the barrier above 60,000, which is just important to be above 60,000. So what happened in the jobs report that is leading to these green candles galore everywhere? SoFi as well, 714. SoFi is up 2%. Robinhood's almost at $18. Yeah, why is this happening? Well, this is the jobs data we got. Non-farm payrolls, 175,000 versus 238,000 expected. That's a big miss. What does that mean? That means less jobs were created, and people got less jobs essentially than what the market was expecting, which is very good for inflation. Average hourly earnings month over month only went up 0.2% versus 0.3%. That's very good. That means wage price spiral inflation likely not as big of a concern as it was a few months ago. Unemployment rate, 3.8 to 3.9. Not a crazy difference, but it is going in the direction the Fed wants it to go because, again, in order for inflation really to stop, we need growth to slow down. Those GDP expectations we got a couple days ago at 1.6% were perceived as bad because inflation wasn't going down, which is what gets you stagflation, lowering growth and higher inflation. However, now, if we're having lowering growth and the numbers that you're looking at right now indicate that inflation will come down because of that lower growth, because consumers just won't have the money to be able to keep spending into the economy, then that means a rate cut is back on the table. S&P went up 1% as soon as this news came out. Markets like it because it's signaling a colder economy on the jobs front with more downside pressure on inflation. Now, some people might be saying, well, wait a second. This means that if there's more unemployment and less jobs, that it's going to be bad for overall consumers. That is correct. The only nuance here is that 3.9 versus 3.8 is not like 7% unemployment versus 3.8% unemployment, right? It's slightly higher, but it's enough. It's enough of a slight higher reading in order for the market to believe that rate cuts are going to be coming. In fact, as soon as this So what I'm trying to say is that it's not like catastrophic for the economy, right? It just means growth is slowing down, which is what we need at the end of the day for inflation to come down. As soon as this came out, futures have priced in 2 rate cuts of 25 basis points in 2024 versus 1 before the jobs data. So literally at 8:29 this morning, there was 1 rate cut priced in. As soon as this jobs data came out, 2 rate cuts were priced in. And now, instead of the rate cut happening in November, traders are estimating that it would happen in September. The futures contracts are also estimating that that rate cut has been pulled forward to September. And there you go. That's what you needed. That's literally what we needed in order for the markets to show some love. And as you can see right here, Bitcoin, I did not see Bitcoin go above 60,000, dude. That surprised me this morning. I literally was not looking at that. Robinhood 17.99 in the pre-market. Starbucks is up a little bit, 1%. SMCI is up 1%. SoundHound is up 2.3%. PayPal's up 1%. AMD up 1.12. Google up 1. Let's check on Apple. We'll obviously talk about Apple in a second. Apple is up 7.34% in the pre-markets, 185. If the green continues and it doesn't get sold off, which I don't think it will, Apple has a chance of seeing 187, 188 today. Which would be adding about $200 billion of market capitalization to Apple. Even Enovix, look at that, is up 3%. It was up 45% yesterday. Now it's up another 3.3%. I mean, pretty damn incredible. Alibaba up 1.46%. And then again, the S&P up 1%. QQQ should be up as well. Qs are up 1.53% as well. Wow. Pretty incredible. Could NVIDIA break 900 today? Where is NVIDIA? NVIDIA 874. I mean, it's up 1.9%. Let's see. Now, today is a Friday, so I'm always skeptical on Fridays because Fridays are Fridays, and the markets tend to get sold off on those days. Palantir right here, 2342. But this jobs report was what we needed. I mean, this jobs report was really what we needed for the market to calm down a little bit and get at least the idea that inflation is going to be under control in the correct expectations. The funny thing about this inflation reading is that Jay Powell literally said on the FOMC meeting, yeah, we don't have the right data to show inflation is cooling down. We need growth to slow down, but we're not going to hike because we just don't think that a hike is warranted, but we also don't think a cut is warranted. You can obviously see that Jay Powell's leaning more towards the cut versus the hike. The question is just getting the data in place in order for him to give us the cut. And what we're seeing on the jobs data right now is it's definitely leaning towards cut versus hike, especially if unemployment is going higher and we have less jobs, because obviously that signals that we should definitely not be hiking, right? Like if unemployment went to like 3.3 from 3.8, right? And there was just like 500,000 new jobs added, then yeah, we would have to hike because we would have too much growth, way too much money. There would be no way the Fed could cut rates, which means equities obviously would be suffering if the Fed couldn't cut rates. But growth is slowing down, even if it's tangentially, even if it's like marginal growth slowdowns, it is happening, which is what's really good for the economy. Let's get Tom Lee and his thoughts yesterday on what's going on with inflation and what we need for inflation to come down. And then we'll get straight into Apple earnings. Thank you, everybody, for being here. Here we go.
Advisors Tom Lee joins us with his predictions. Tom, it's great to have you back. I imagine you were listening just now, and I wonder if you take these sort of disparate signals out of earnings so far, and is that just a characteristic of a period in which the job market may be in transition?
I think that's right, Carl. I know investors are wrestling with a lot of questions in their minds because inflation is higher than they expected at the start of this year, and rates are higher, and stocks are higher. So they're wondering if this is a payback period. And now we're hearing different forecasts for Fed cuts. And as you're pointing out, I think it's been an overall good earnings season, but we're hearing evidence of companies not being able to pass on price, and there's some demand weakness and wage pressures. I think that's part of the confusion that's taking place now. But to me, I'm kind of in the camp that despite all this, it's all going to come down to whether inflation improves in the next couple of months or the rest of the year. And if it does, a lot of these sort of clouds lift, and I think markets actually do quite well.
Which is why I think the consumer weakness commentary and the weakness that Chair Powell cited in terms of demand for labor, at least weakening back to pre-pandemic levels, is important, right, Tom? Shouldn't that?
It's very important what Powell said about demand for labor, and the jobs report today is showing that Powell's argument about the demand for labor weakening is proving that unemployment will go higher, which means we're probably going to get that cut later this year.
Ultimately, bring inflation levels down?
That's right. I mean, I'd say the interview that CNBC did with Starbucks yesterday was very telling. I think that the answer ultimately there is they probably have to cut price, and if they're cutting prices, that's not reflation anymore. It's a reversal of that. And I think we're seeing consumers basically have their wallet getting squeezed because auto insurance and homeowners insurance has really sort of eaten in their discretionary dollars. And again, that's not really an inflationary signal. So I think the bar is actually being lowered now for the Fed to cut. And I think that's something I think many people picked up. I mean, the Fed stated it clearly. If the employment market even shows signs of weakness, that's another reason to cut rates. And we'll find out tomorrow.
Literally, this guy is almost a prophet, dude. I mean, he says two things. He says, number one, I think that the bar is lowered for the Fed to cut rates based on what Jay Powell said. And then he says, if the unemployment market even shows a little bit of weakness tomorrow, we're going to see some momentum in the markets because the markets are going to price in a rate cut. And that's what we're seeing. For those that are just joining, this jobs report was incredibly important in terms of what we're seeing in the broader ecosystem for inflation. Non-farm payrolls 175 versus 238. Our average hourly earnings month over month 0.2 versus 0.3, and then unemployment rate 3.9 versus 3.8. This is what we needed, dude. This is what we needed after a good Q1 earnings cycle, which I think we have a few weeks left of Q1 earnings, but all the big companies reported it, including Apple. Nvidia's left. This is what we needed for the market to continue to maintain its momentum in a world that has higher inflation than what we've wanted so far. Okay, so that's what we got on the jobs. Let's talk about Apple. By the way, let's shout out to June in the chat. She just said she sold out of Lilly at 150% gain. That's incredible. Lilly's right now, Eli Lilly is the company she's talking about, pharmaceutical company. It was up 5% on earnings, up 33% this year. Lilly is 745. So, wow, that's pretty incredible. That means you must have got it closer to the 350 range, 300 range. Not bad at all. Shout out to June. We always got to celebrate when someone in the chat gets a big win, and that's a big win. 150% is not bad at all. Not bad. So we got Eli Lilly at 746 right now in the pre-market. Nvidia 1.95. Palantir up 4%, 23.45. Robinhood is $17.98 in the pre-market. Enovix 9.75 in the pre-markets. Alibaba, we'll talk about Alibaba. I know people are confused about that one. We'll get into that. And then Apple 185. All right. Let's talk about Apple. Let's talk about what Mr. Tim Cook did yesterday to get people to buy his stock. Okay, what happened? So, Apple had a crappy earnings. I mean, it was not a good earnings from a numbers perspective. They're growing 2% year over year. Now with the bump that they're getting in the pre-markets, they're going to be at a 32, 33 PE. You really got to ask yourself, is that worth paying when it comes to a company that's just not growing as much? $90 billion in revenue, 45 out of the 90 billion was iPhone. That was like, I mean, that was astonishing for me to see. I was going through their numbers last night again at like 11 p.m. and I was like, wow, half of their revenue is this freaking phone. Like if this phone was not a thing, Apple would not be a thing. It is still the iPhone. So you got to ask yourself then, and that's not even growing. Now, one thing that is happening is that China sales, all these research and analysts were like, oh, China's going to decline dramatically. China's declining, but not at the rate of growth that people thought it was declining at. So that was bullish for Apple. I think the market liked that. But more importantly, Apple announced a $110 billion buyback. And that is the largest buyback in the history of corporate buybacks ever. So here's a chart right here showing you how many buybacks we've had in the history of the stock market, or at least big buybacks. Apple announced 110 billion. By the way, the second largest was Apple back in May 2018 at 100 billion. And then the third largest was Apple at 90 billion. And then the fourth largest was Apple at 90 billion again in 2020. Like it just keeps going Apple. The only one that's comparable is Chevron that announced a $75 billion buyback back in January 2023. Then you got Google with some $70 billion buybacks. You got Microsoft 60 billion. Facebook did 50 billion, but majority is Apple. Majority is Apple. I mean, on this list, Apple pretty much is dominating here. So $110 billion is essentially going to create a floor to this stock. I mean, they are not going to let this stock go under, because if it even, teethers into the 140s, 150s, Apple's just going to buy back a crap ton of stock. That's going to artificially keep the stock higher. Obviously, as they buy back the stock, the float decreases, which means the ownership, your shares are worth more because you have a larger percentage of the pie, because the pie gets smaller. So just to put into context, Apple buying back their stock, right? Just to give some context, Guatemala has a $95 billion GDP. Bulgaria has an $89 billion GDP. Apple has bought back more stock than the GDP of Guatemala, Bulgaria, Luxembourg, Uzbekistan, Panama, Tanzania, Sri Lanka, Ghana, Uruguay, Croatia, Belarus, Costa Rica, Slovenia. Like, it's just like all these countries are the 30 to $80 billion market caps in terms of their GDP. And Apple's just buying it up, right? Estonia, El Salvador, Honduras. It's really incredible. Iceland. It is absolutely incredible. And so the reason I thought this was so interesting is because it seems like, at least this was the chatter last night, Apple does not have something that they can really pull off that's exciting enough to keep the market excited, because the buyback is what's keeping the company afloat. Like, if you're buying back that much worth of stock, I mean, at what point are you going to be able to show there's real innovation? And I mean, if you have $110 billion that you're putting back into the stock, you're probably not innovating. You're probably not, doing a ton of research and development. You're giving it back to shareholders. Second quarter revenue, 90.75 versus 90.3. They beat on revenue. iPhone revenue, 45.96 versus 45.76. Greater China revenue was 16.37 billion. That's down 8% year over year. But again, analysts were expecting 15.8 billion. So they put up another 500 million, which is what got the market also excited. And then again, $110 billion, EPS 153 versus 150. Now, not only did Apple do that, they also did something really exciting, which is they increased their dividend by 1 cent. So we have Mr. Warren Buffett, who is now going to receive $217 million, or he was receiving $217 million a quarter. Now he's going to receive $226 million. A 1 cent increase means a $9 million increase in dividend payments for Buffett, or $36 million a year. So it went from 24 cents to 25 cents a share. Buffett has 905 million shares. So Apple's going to email him, or not email him, but probably physically mail him a nice check for $226 million every quarter. It is just incredible. It is just incredible. What else do we have? So that right there is also really interesting in the context of just how much momentum Apple's going to have in regards to keeping the stock afloat. Now, the stock itself staying up at 7%, it's adding almost $200 billion to the market cap. I'm happy for this because I want the stock market to stay afloat. And if Apple does well, the market tends to do well. Now, the market has gone inverse to Apple. Wow, look at Coinbase. It's actually green. We'll talk about Coinbase in a second, but Coinbase flipping green is interesting. It was red the majority of the pre-market. Apple doing well helps the economy, and all the big seven have done well so far. The one you could argue hasn't done that well is Tesla, but I beg to differ. I mean, Tesla laid out a vision that was qualitative, even if not quantitative, inside of their earnings call. So even if the numbers weren't amazing, which objectively the numbers weren't amazing, the vision they laid out was really good. And if the vision they laid out was really good and got investors excited, by the way, they did expedite the timeline in terms of their production on the M2 vehicle, then that is something quantitative I think people can point to, which is why Tesla probably deserves the pump that they got. So every company has done well, including Apple, even if Apple had to, spend $110 billion to do well. NVIDIA's left. If NVIDIA crushes, then I think the Mag 7 are going to be 7 for 7. And Meta went down for a stupid reason, right? Meta still crushed their earnings as well. So if we go 7 for 7 on earnings on the 7 biggest companies that actually matter, and then this unemployment data we got this morning shows that a rate cut is more likely than not, the bull market thesis is very intact. And if inflation actually falls off a cliff with shelter and oil starting to come down, hopefully by around August, then I think we're set up for a really nice end of the year if this can play out. By then we'll have Q2 earnings, and if Q2 earnings also goes well, then I think it's going to be an exciting end of the year. So let's see. Let's see what ends up happening. But so far, that's what we're looking at right now. Palantir as well, up 4% in the pre-market, 23.47. Palantir earnings are on Monday. We'll talk more about Palantir in a bit. I'll be covering those earnings live with Arnie. I do think that there is going to be some FOMO today because people are getting a bit more excited about Palantir, right? This is kind of what we saw with SoFi. By the way, SoFi in the pre-markets, right before SoFi, it got to $8 right before their earnings. SoFi, $7.14. That's nice to see. Not only the jobs data was really good for today, but also people are thinking, well, if Palantir crushes it, they want to get in right before Palantir actually crushes it. So I think that could lead to some momentum. Dare I say we even see $24 today. We're at what, 23.40? We haven't been in the 23s since April 8th. It's been basically a month. So it wouldn't surprise me. Now, granted, I don't think it's the best thing for us to get to like $24 before earnings, because then if earnings aren't the best, then we're coming right back down. But if we stay in this range going into earnings and then make a run for 26, 27, it can get very exciting. It can get very, very exciting for Palantir. So we're going to have to see. We're going to have to see how that ends up playing out. Couple of things I want to show. Should we do this Apple stuff? Okay, we'll leave a little bit more Apple stuff. I want to talk about Bitcoin, and then we'll go back to Apple. I want to share a couple of things around Apple because there's still a little bit more coverage I want to show you guys. The earnings call itself was not the best, quite frankly. They had this guy named Amit, and so during the call, they kept saying, Amit, you can ask your question. And I'm over here, like I'm doing a live stream for YouTube. I didn't know that they were giving me a question, but apparently it wasn't me. It was some other dude named Amit. But regardless, the questions themselves weren't that interesting. The main thing that I got from the earnings call is that they did not talk about the Vision Pro either. The Vision Pro was like really not discussed as much as it should have been discussed. And I think, Tim Cook made like 2 comments on it. He said he's super excited about it. Like, he doesn't sound excited about it. And then in terms of generative AI, I don't think they laid out a real vision that was compelling enough. Again, I think the stock is up because of the $110 billion in buybacks. And we'll see. I think they have an event on May 7th. So next Wednesday, we'll see what their AI approach is. It's a new iPad event that is geared towards AI. That's what the rumors are saying. So we'll see what they say. It's going to have to be some type of device, built with AI, or some type of software built with AI intrinsically. And then WWDC in June, we'll see what else they can say as well. So that's what we got on Apple. We'll get back to them in a bit and we'll keep discussing. But overall, $110 billion. That's pretty much what you needed for things to go well. Was he muted? Dude, the funniest thing, he was muted on CNBC right when Apple earnings came out, and he had to like give his thoughts. They were like, "So Amit, what do you think?" And my guy was muted, bro. Full 20 seconds muted. Like, he's the professional. I'm over here. And he was muted. So it just goes to show, if your name is Amit and you're trying to broadcast yourself to the world, you got to check your settings on the mic. Because if you don't, things can get ugly. All right. So let's take a look at this. This is also very interesting. And this is also another reason why I think Bitcoin is up right now outside of the jobs report. So this is a chart that I think is really interesting and we want to talk about. Bitcoin ETF inflows are still disgusting. We're not getting a lot of inflows. It's just not coming up yet, but this might potentially change it, this chart. So what you're looking at right here is the M2 money supply. The M2 money supply is, or this is not the exact M2 money supply, but this is the percentage change of growth in the M2 money supply, right? So it's not literally the amount of money, which is what the M2 money supply is, how much money is in the economy, but it's more so the percentage change of growth. As you can see, in 2020 and 2021, it went up a lot. It went up by 25%. Why? Because we printed $7 trillion. That was a lot of money, right? And as a result of doing a lot of money, the M2 money supply went up, so the percentage growth went up. And then the Fed started doing quantitative tightening, so they started selling assets off their balance sheet. And then not only were they selling assets off their balance sheet, the interest rates were going higher, right? All throughout, this is when all of our stocks went to shit, right? And then 2023 still was under. Look at this little blue bar right there. As of April 2024, we're seeing a little bit of momentum. That doesn't mean the M2 money supply is dramatically increasing, but what that does mean is that there's this word that starts with an L that's starting to go higher, which is liquidity. And liquidity goes higher, Bitcoin does well. We can see this just in this chart. If you look at Bitcoin price action, it goes up with this chart, goes down with this chart. And so the percentage change of money supply in the M2 is starting to inch a little higher. It's not dramatic, but it's a little higher. And it's one thing to keep your eye on when it comes to Bitcoin, especially if we were to get a rate cut. At this point, I am convinced, and it's going to be very hard to change my mind on this, that Bitcoin performs like a growth stock. Yesterday, look at the inflows. We got 13 million, 1.5, 3, 2 million. We lost 54 from a GBTC. And then BlackRock, Fidelity, and Bitwise, the 3 biggest ones, they brought in 0. So I am convinced at this point that Bitcoin is a growth stock. It performs with the NASDAQ, and the NASDAQ needs rate cuts. And the NASDAQ also needs momentum in the context of liquidity entering the system for people to want to buy equities, right? It's why treasuries selling off is not necessarily the best for the equity market. Bitcoin is really the same. It really performs the same. It does not perform as a hedge against inflation. All that stuff is nonsense. So from that perspective, if we're seeing the M2 money supply start to go inch a little higher, gold, by the way, is up 0.07% right now, $2,300 an ounce. We could also see Bitcoin start to see some of that momentum. And again, if you're just joining this jobs report that we got, very, very good for the broader equity market. Unemployment has gone up to 3.9%. Unemployment going higher means that the Fed likely will think about cutting rates. And again, if unemployment goes up as well, jobs go down in terms of the overall, or in terms of the amount of people getting to jobs, that could also signal that the CPI, maybe not in May, but maybe in June, we're going to see the actual ramifications of that. And that could get us back below at least 3%, 3.1, 3.2. And then hopefully by August, we're at 2.8, 2.7. Then by September, if we're at 2.6, we're going to cut rates. Because at that point, then if you keep rates that elevated, yeah, it's not at 2% literally, but core PCE will be much closer to 2%, even if it's at 2.1, 2.3. And then the Fed will likely induce a recession if they don't cut rates, right? It's not going to be a question of should we or should we not. It's going to be a question of like, how fast can we do it? Just like raising rates was a question of how fast back in early 2022. So I think we're going to see some momentum, and I think it's going to be good, but we just need to keep getting jobs data to continue going down. And we'll see how that plays out. Where's Bitcoin? 61,000? Really? Wow. Dude, that's incredible, bro. What the fuck? That's crazy, dude. That's why Coinbase should be up, right? Okay, so Coinbase, I think it's turning a little green, not only off the jobs data, but Bitcoin exploding 2%. There you go. MicroStrategy's up 7% because Bitcoin's up. Michael Saylor had a whole conference yesterday at their first like Bitcoin development conference. So he had said a bunch of things. Cypher's up 5%. Hut 8 mining's up 4%. Clean Spark's up 5.83%. Marathon's up 6%. All the miners actually have held up pretty well, even though Bitcoin has not like doubled since the halving event, right? Because the miners need Bitcoin to go higher in order for them to continue to maintain their revenue after the halving event. But they've been able to sustain themselves because I think the market knows that the halving event takes some time. And the market also knows that once it really goes into effect, the miners are going to be one of the best plays in the market. And so that's why we're seeing them maintain some value. Not bad at all for Bitcoin. All right, I want to play a couple of things in regards to Apple and see some of this stuff. So let me pull this up real quick. Let me just exit out of this. Okay, here we go. Let's play this real quick. I want to talk about the share buybacks, and then we'll move on to Square and Coinbase earnings after this because those were interesting as well. Here we go.
And also raising the dividend by a penny, but still a raise.
Yeah. Hey, good broadcasting from London. I wish I was there with you, Frank. So I think a couple of things. There were about 4 things that really stood out to me. One was that China is decelerating at a slower pace, but that mainland China, according to Tim, actually grew in the quarter. And more importantly, what they are seeing across all the other EMs is that they are starting to close the gap with China, which is, of course, still by far the largest emerging market country by sales. So that was important to us. We've always been big fans of services. That was why we bought the stock back in the mid-2015 period, 2016 period. So we love to see that still growing at 14% a year, which is pretty amazing given the base. And then, of course, I've talked about the share buybacks with you many times. We have argued that would put a floor under the stock. This is, of course, a remarkable buyback declared by the company, and it will indeed do that and increase earnings per share, probably 300 to 500 basis points in the coming years. So that's super important. And then lastly, I think that the AI discussion, even though Tim Cook didn't say anything, he repeated that the company has distinct advantages that the rest of technology doesn't have across all their product lines. He's been at this a long time. He's been consistently underestimated.
Okay.
I think the announcement's probably going to be pretty positive.
So I will say this about AI, and I want everyone in the chat, and I want to see if you guys have an answer to this question. Then we'll move on to Square and Coinbase. I think Apple's going to announce some AI-powered iPhone, either in June or September, whenever they announce it. I am struggling to think what is the use case of this AI-powered iPhone that's going to create a massive upgrade cycle. I'm sure there's going to be some type of use case that they're going to surprise with. But just to pontificate and brainstorm, what could Tim Cook announce in terms of an iPhone that is built with and powered by AI? I mean, they might as well call it an AI phone or something, right? An AI phone? Holy shit. Holy shit. AI phone. Bro. Dude, if anyone in Apple is listening right now in the marketing, y'all gotta fucking hire me for that. That was crazy, dude. That was innovation you guys saw at 9:15 a.m. Literally, that was a fucking epiphany. Dude, AI phone? Are you kidding me? I gotta write this down. No one steal this from me. No one fucking steal this from me. Hold on, I gotta write this shit down. No one steal this shit. AI phone. Okay, I'm signing this document right now. Signed, Amit Kukreja, Friday, May 3rd. You guys are seeing this shit happen real time, 9:15 a.m. No one steal this from me, all right? This is my shit, all right? AI phone. I'm writing this right now. Boom. Documented, baby. AI phone. Anyway, if he comes out with an AI phone, my question is, what features are going to be in this AI phone that are going to be so interesting that it'll force people to upgrade? Because I personally don't know exactly what it would be. Could it be an LLM of your data integrated into the iPhone? Could it be your digital assistant? Could it be the backbone of how you plan your days and how things happen? I'm a little skeptical on what that could be that would create this urgency. Like, I just got the iPhone 15 in October, right? Do I really think I need to upgrade to an iPhone 16 or an AI phone if there's, not this resounding feature? I don't know. I don't know if it's necessarily going to exist. So that's the part I'm skeptical about. And Tim Cook keeps saying, like, trust me, bro, we've got something good. It's going to, I'm just like, I don't know, dude. You said that about the Vision Pro, and the Vision Pro has not really been the thing that we all love and care about. Bitcoin right here, 61,000. And again, not to hate on the Vision Pro, but it is what it is, dude. It's like the biggest YouTubers in the world are saying they're returning their Vision Pros. And if they're the tech nerds that aren't using this, it's going to be hard to justify the entire world using it. So I am a bit skeptical. And I think it's a good cautious level of skepticism around Apple saying they have this AI plan, and me thinking logically, well, what could the device do that is so transformational that requires an upgrade cycle? Because again, they don't make money off the software. They make money off me paying the $1,500 for the iPhone, right? 45 billion of their 90 billion in revenue this quarter was the iPhone. So they need people to buy the new device, which they have 46% gross margins on, which are incredible for a hardware company, in order for it to be valuable at the end of the day. And I'm struggling to see what that AI phone could actually do. But if it does do something interesting, then maybe that upgrade cycle will happen more easily than what we think. Where's Enphase right now? Is Enphase pumping because of the Enphase? Wow, Enphase 110. Yep, up 3.8%. Enphase, again, very interest rate sensitive. So, I mean, look, if you've been DCing Enphase over the past couple of months, I do think when rates get cut, Enphase will perform dramatically because, I mean, solar growth will just catch up, right? The question is, when are those rate cuts happening? And as per the jobs report today, it seems like it's definitely not a hike. And it could be sooner than we expected. Again, traders are estimating now it's September versus November, which would be, ironically, right before the election. But if it does happen, that would be exciting for companies like Enphase that are interest rate sensitive. 875 on NVIDIA right now. Enovix up 3%. Alibaba up 1.36%. And then you got Disney here up about 1% as well. Okay, let's talk about Baba. What's going on with Baba? So, Baba's up, and Baba's up pretty nicely, up 7% right now. And I think the reason that Alibaba is up is for a couple things. Number one, Alibaba is grossly undervalued. We all know it's ridiculously undervalued. They have $100 billion in cash. They have a $200 billion market cap. This is not a company that should have a $200 billion market cap for having $100 billion in cash. Like, I mean, look at Apple having $100 billion in cash and they're worth $3 trillion right now. Apple's not Alibaba, but the point is, you would imagine Alibaba's worth maybe $500-600 billion. It's like basically the Amazon of China. From a variety of perspectives. Alibaba's a cloud company as well. They're not just a merchandising e-commerce company. So why is Alibaba going up? There have been some reports coming out essentially that the Chinese government is getting a lot friendlier in regards to what's going to happen when it comes to opening up the economic, I don't even want to say borders, but like the economic mobility of the company to be more excited to embrace free market capitalism. And obviously some of the things that are needed for an economy to thrive. Now, why is the Chinese government doing this? Because we know real estate market is in the dumps. China needs to be competitive with AI. And in order to be competitive with AI, they need to actually allow tech companies to innovate. China's economy itself, in terms of average GDP per capita, is going down because most people's wealth is in real estate, and real estate is starting to experience like a pretty dramatic crash in China. So what allows China to go higher? You need the tech companies to continue to keep doing what they need to do. The CCP has not had a good run this year. I mean, the markets have been the highest they've ever been, and China has just been in the gutter. And one of the reasons for that is primarily because the business environment in China has also been pretty disgusting. There is a reason why Apple, and we're going to look at Apple and China in a second, is diversifying to India. There is a reason companies are taking their supply chains out of China. There's a reason that Starbucks is struggling in China. The average Chinese consumer is not able to pay as much for a cup of coffee in China because their net worths are going down as well. And China declining was one of the main reasons why Starbucks was down as well. So from that perspective, if you're Xi Jinping and you're thinking that, maybe Trump gets elected and Trump started a trade war with China back in 2018, what can you do to protect the country over the next couple of years? You've got to open up the economic mobility of the country to actually thrive, especially when exports from Mexico are up 23% year over year. And China, I think, was at like 15%. So there's a delta between Mexico and China exporting to the US, which is insane. because China is one of the biggest exporters in the world to the United States, but we've started to diversify where we're getting our exports from. That is why Alibaba continues to inch higher based off some of those rules. Now, in my opinion, Alibaba is still a no-go, even though I think this thing will probably pump to like $100 and it would still be ridiculously undervalued. Remember, it was at $300 at one point. And the reason it's a no-go is because you just don't know what Xi Jinping is going to do. Imagine China invades Taiwan next year if Biden gets reelected, or maybe even if Trump gets elected. You just don't know. And I think there's so many other opportunities in the market where you don't have to take that type of geopolitical risk that you can still make, that you can, benefit from. Coinbase right here up about 1% in the pre-market. We'll talk about them in a second. That justifies not needing to take the equity premium risk of investing in China. Now, granted, if things stay normal and peacetime remains, I think Alibaba is $105, $110 stock very easily. The question becomes, do you want to take that risk? I personally wouldn't, but I don't think it's crazy to want to take that risk. It's just a question of if that risk is calculated enough to withstand Xi Jinping potentially getting annoyed one day and turning off the country. And so we'll see. We'll see how that plays out. June says, who wants to go in with me on a beachfront property in China? Yeah, see, that's the other thing. Real estate development, the whole Evergrande crisis. I mean, people also aren't buying up land like it's 1800 in Manhattan, right? Like, people aren't doing that in China, even though you're getting it for pennies on the dollar, because the argument is, well, why would you want to invest in a country like that, especially in the context of their real estate market? There's a good 60 Minutes documentary we talked about on the channel before, but there are literally hundreds of buildings, like towers, apartment complexes that are empty in China. So like, real estate is, and it's not that easy to just get rid of those buildings, right? So they're taking up space. They're not producing any income. They're definitely not producing any ROI. And if the average person in China has more money in real estate than they do in the stock market, and the Chinese stock market has been abysmal, then you do need companies to start innovating, and Alibaba needs to start performing as well. Amit, do you know what May the 4th is? Yeah, it's like May the Force be with you or something, right? That's the thing. May the 4th be with you. Yeah, is that from Star Wars, right? Yeah, it's from Star Wars. Yeah, see, I'm not that uncultured. It's definitely a reference that I know, even though I've still never watched Star Wars. But still, yeah, May the 4th be with you. Oh, tomorrow's May 4th. Okay, so May the 4th be with everybody that cares about Star Wars. Michael says it's the day before Cinco de Mayo. Only thing that matters. That's true. Cinco de Mayo. I would say Cinco de Mayo matters a lot more than May the 4th be with you. But that's what we have for Apple and for Alibaba. Okay, let's talk about Coinbase. So I did an earnings play on Coinbase, and I thought it would have gone well. And ultimately, I think the earnings did well, but the stupid Bitcoin thing is not working out. So here's the earnings play I did on Coinbase real quick, and then we'll talk about the earnings. So let's move this here. I did a spread on Coinbase, and it was a 250, 255 call. A call debit spread, right? So I bought the 250, sold the 255, May 17th. It cost me $125. If Coinbase gets closer to 255 or gets to 255, I will make the difference between 5 and what I paid. So the spread, the width of the spread, 255 minus 250 is $5. I paid $125. 5 minus 125 is 375. 375 times 100 shares would be $375. That would be a 3x increase from the amount I paid, which is 125. Getting to 255 would be a 14% move. I thought in the next 2 weeks, if Coinbase had a monster earnings, a 14% move, if you just look at some of the technicals as well, Coinbase has hit 255 relatively easy. I mean, it's not been a hard thing for Coinbase to get to that 250 level. By the way, I would just sell this thing at like 235, 240 and hopefully make like a 50 to 60% gain. I don't need to wait for the entire 300% gain. And it all was contingent upon Coinbase having a good earnings. Coinbase had a monster earnings, dude. I mean, this earnings was ridiculous. If you just look at the stats right here, the problem was Bitcoin fell after hours yesterday, and I think that hurt Coinbase, which was not the best thing. But Coinbase still had an amazing earnings. 1.6 billion in revenue, 1.2 billion in net income. Now, some of the net income was mark-to-market gains that they were able to realize due to the FASB rules in regards to crypto. So it's not literally all net income, but still hundreds and hundreds of millions of dollars these guys made off of just people buying and selling on their crypto platform. Now, their institutional platform, which was Coinbase Prime, saw record high growth. And the reason it saw record high growth is because the BlackRocks, the Fidelities, all those guys started buying a crap ton of Bitcoin off of Coinbase Prime, and they needed an institutional custodian like Coinbase to be able to effectively do that. So one thing I saw here that was interesting, and this was a chart that was that you either assume is bullish or bearish, right? You either assume it's bullish or bearish. So if you look right here, retail trading volume for Coinbase in Q4 2021 was $177 billion of activity. In Q1 2024, it's 56 billion. It's not even half of Q4 2021. The bear side of that lets you say, well, wait a second, retail is not coming back because they're too scared to buy crypto if only half or less than half of the retail trading action when Bitcoin was at the same price, right? 60,000 back in November 2021, is not showing up for this bull run. That's the bear side to it. Now, look at their institutional. Institutional was 256 billion. So retail was only 56 billion of trading volumes, and institutional was 256 billion. The bull case is, holy crap, retail's not even back yet. And if retail's not even back yet, I mean, retail's not back. And maybe that means that this Bitcoin rally has been primarily driven by the ETFs, i.e. the institutions, but retail hasn't even entered the party. Maybe retail enters the party at 70,000, 80,000, 90,000, 100,000, but retail is going to enter the party at some point. There's no way in hell retail does not enter the party. I mean, there's going to be way too much FOMO. We know human instincts. People start getting aggressive about wanting to make money if they think everyone's making money. That's going to happen. Those animal spirits will be alive. The question is, when does it happen? And at what price does Bitcoin necessarily trigger that? Because right now, as Bitcoin's flat or stagnant, we're not going to see that. It's also a potentially bullish or bear case for Robinhood. So one can make the argument that if Coinbase has low retail activity, then Robinhood's not going to have huge retail activity. We do know Robinhood's volumes were 6 billion a quarter or a month for the past January, February. March is probably going to be a little bit higher than that or a little bit lower. So not going to affect them in Q1. But if this number doesn't tick up in Q2, that could be bearish for Robinhood's crypto revenues, along with Coinbase's crypto revenues as well. We are 1 month into Q2. April wasn't the best month for Bitcoin. If May and June end up going better, then that retail momentum probably will accelerate and institutional momentum will accelerate as well. But one thing to think about when it comes to comparing some of the volumes around Coinbase and Robinhood as well. So Robinhood right here up 1.42%, but Coinbase still printed just an amazing quarter. I mean, 1.2 billion in net income is ridiculous. 1.6 billion in revenue, phenomenal. And these guys are going to keep printing as long as Bitcoin goes up. Bitcoin right now is at 61,000. As long as Bitcoin keeps doing what it has to do, Coinbase should be fine. But we're going to see if it ends up playing out. Retail's going ETF. Well, that's the other thing. That's the other bull case for Robinhood, right? Is that if retail's not literally buying the Bitcoin and they're buying on the ETFs, then I mean, Robinhood should benefit from that, right? Schwab should benefit from that. Fidelity should. By the way, I found out yesterday Charles Schwab is a real person. He's worth $10 billion. Did you guys know that? Be honest. Be honest. Don't just let me sound stupid right now. Did anyone actually think Charles Schwab was a real person? Like, I thought this dude was like, yo, how egotistical do you have to be to name your brokerage Charles Schwab and your name is Charles Schwab? Don't you think that's a little egotistical? Now, granted, if I came up with one of the first brokerages in the 1980s that had low fees and like I grew it into a multi-$100 billion business, like I would probably call it a mid-Croatia and people would be fucking trading stocks on a mid-Croatia. That'd be pretty fucking cool. I'm not going to lie. I look at myself in the mirror every morning and give myself a kiss. Like, damn, people are trading on my name every single day. But still, it's a bit egotistical. Like, it's not called Vlad Tenev. It's called Robinhood, right? It's just, I was thinking about that the other day. I was like, oh, this guy's a real person. But anyway, here we go. We are here Friday, May 3rd, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Bitcoin 61,211. It's been so long, Bitcoin. You've been down in those 57s. We don't like the 57s. We like the 60s. Here we go. Bitcoin, 61,217. Not bad. Tesla, 182, up 1.2%. Alibaba, 81, up 1.1%. American Airlines, up about 1.23%. PayPal, up 1.2%. SoFi, up 2.44%. Not bad on SoFi. Seeing a little bit of momentum there, getting out of the $6 range that it was stuck at. So nice to see SoFi getting up a little bit. S&P 500 up 1.23%. Snapchat Went from $10 to 16.51, dude. Snapchat has had a nice resurgence, 1.29% on the day. Meta's up about 1%. Coinbase is now red. I kind of expect Coinbase to be red because the initial reaction was red, but we'll see if it can make its way to green. It also pumped 10% yesterday, so I guess the earnings pump was basically baked into the earnings. So we'll see what happens to Coinbase. AMD up 1.19, Netflix up 1%, Square up 8%. We'll talk about Square in a second. Jack Dorsey announced that Square is going to be dollar cost averaging into Bitcoin on their balance sheet. And they're going to be doing that through taking 10% of the gross profits from their Bitcoin related products and putting it into Bitcoin. I think it's a phenomenal idea. I think it makes a lot of sense. If you're a company that has a philosophy built on people buying and selling Bitcoin, then why wouldn't you do that on an institutional level? So they're following MicroStrategy, and I think it's a good idea. Roku's up 1.5%, DraftKings up 3.4%, Nike up 1%, Roblox up 3.8%, Robinhood $17.95, trying to get to that $18 range, up 1.93%. Google, wow, trying to get back to 170 on Google. We'll see if Google can get there. 169.51. Where's Palantir? Palantir 23.23. Okay, so falling off as earnings, or not earnings, as the market opens. They have earnings on Monday. They were at 23.50, now 23.25. We'll see if that can hold up. But nice to see that Palantir is in the green and past the 23s. Definitely something we want to see on Palantir. Let's just see if this can continue. So there you go. Palantir at 23. Robinhood above $18. Not bad. Seeing some momentum there for Robinhood. We'll see if that can hold. Again, that's the big thing. Robinhood, again, they benefited from Coinbase earnings, but Coinbase was up 10% of the day, so Coinbase didn't get as much of a benefit as something like Robinhood. But they are kind of looked at together in the eyes of the market. Robinhood at 1804. Coinbase, is it green? Coinbase, wow, actually green. Coinbase is actually green. Let's see where my spreads are on Coinbase. Are they green? No, they're down a little bit. They're down 6%. Yeah, we probably need Coinbase to get to like 234-ish for those spreads to get green right now. I bought them at like 214. They're at 230. Yeah, now they're break even. Yeah, the spreads are basically break even. So now the spreads are up 8%. Yeah, Coinbase needs to settle in. It needs to actually turn green today. Right now it's like playing. If it can turn green, maybe those spreads become a bit more profitable. SoFi up 2.5%. Tesla 189. Wow, or not 189, 181, up 1%. And then Nvidia right here, 874. 874 opens up 22%. What? Why is open up 22%? Wow. Well, granted, it's up 40 cents. So I guess, dude, the hype around this company has died down. I mean, I remember Open Door used to be like this thing was like $30 at one point, right? Yeah, it was at $39. Yeah. Hype's like died. No one cares about them buying and selling houses, dude. Also in this market where house prices are, not necessarily the easiest for them to pull it off, especially if people don't want to sell, because if they sell to Open Door, they have to go get his almost 8% mortgage. Palantir selling off now. So the Palantir momentum is hard for it to maintain. It seems like people are taking their profits. Traders might be a little speculative that earnings are going to go bad, which is why they're not letting it pump. We'll see into power hour during the day how it plays out, but 23.50 to 23.15 as soon as the market opens. So people a little bit more skeptical about Palantir. Algorithmic sell, yeah, 100% algorithmic sell. Enphase 6%. Enphase is 6% up. Enphase makes sense. If you're just joining, non-farm payrolls came in like 50,000 less than expected. Average wage per hour was only up 0.2% versus 0.3, and then unemployment went to 3.9 versus 3.8. So that's why the market's pumping right now. Look at Apple, up 7%. That's why the market is pumping. Apple just added, about $160 billion in market cap, bro. $160 billion. Kendrick dropped another diss track. You're lying, bro. He dropped another one. Dude, what? He dropped another one. For those that don't know, there is a little bit of a rap battle going on between Kendrick and Drake. Wait, are you talking about Euphoria? Because he dropped that. He already dropped that. It has to be something different than Euphoria, right? He dropped Euphoria a couple days ago. Unless he dropped another one. That's insane. SoFi up 1%. S&P up 1%. Robinhood getting sold off. Look at that. That means Coinbase is probably red. Yeah, look at that. Coinbase goes red. Robinhood basically goes red. Wow. They're pegged together. They're so pegged together, bro. He dropped one again on his Instagram. Oh my gosh. Okay. Well, I'll be listening to that after this show. I thought the first diss was not that good, by the way. I mean, I know a lot of people are saying he won. I'm a little bit of a Drake stan, so but I don't think he said anything original, quite frankly. It was not that interesting. Nvidia 874, robbing it again, going down because Coinbase is going down. What's up with the crypto stocks? So CleanSpark 1684. Wow, Bitcoin's trying to get to 62. Look at that. Holy crap. What a move, dude. What a move on Bitcoin. Riot's up 4%, Cypher's up 7%, Marathon's up 4.63. And then Ethereum as well, above 3,000. Bitcoin really trying to show up here and get higher. Oh, Fubo had earnings. Yeah, Fubo did have earnings. They're up 10% or something, right? Fubo. Oh, wow. They were up 10% in the pre-market. These guys just collapsed. Fubo's not that interesting to me, dude. It's like it's a TV like there's so many. There's Prime and Hulu and like Apple TV. I just never saw the fascination behind Fubo, dude. It's just not interesting at all. Just qualitatively, it's not exciting. The stock, they went public in 2014, dude. Wow, this thing has been around for a while. Yeah, it's not interesting. They were at $62 in 2021. Obviously, they've had a pretty tough time. They tried to sue Disney for like creating this like multi-streaming thing. Like that's not going to work out, dude. You're not going to sue Disney. So Fubo's never been the most interesting. It is for sports fans. That's correct. It is for sports fans. But I don't know if that could be a super, super, super big business long term. Oh, the Knicks won last night as well. That's correct. The Knicks. So I was a Knicks fan growing up, but then I became a LeBron fan because I just like love LeBron. So I like pseudo became a Lakers fan. And so yesterday I was happy to see the Knicks finally win. Palantir back at 23-23 because the Knicks haven't won a back-to-back series since 1999. So it was nice to see them get into the semifinal. They should have got there a day earlier, but Enphase up 10%. Wow. Enphase is going up. They like these jobs numbers. So I'm not from New York. I'm from New Jersey, but I say I'm from New York sometimes just to sound cool because sometimes people don't know what New Jersey is. So I am like a Knicks guy. Like I'm a Knicks dude. I just don't care that much about the Knicks. I care about LeBron, but unfortunately the Lakers haven't had the best season. But I consider myself like a pseudo Knicks fan still. And so the Knicks are going to the second round. DJT Trump. Speaking of New York, we got Trump from New York. That's down 8%. This one's going to be funny, dude. It's still $6 billion market cap. The fact that we've normalized this thing at a multi-billion-dollar market cap when the company does $3 million of revenue, it's insane, but it is what it is. So you got Trump here at $6 billion, SoFi 713, Tesla 182, Robin at 1780, and then Nvidia at 872 on the day. This is going to be a very interesting weekend for Bitcoin. I agree, as Benny says in the chat. This weekend for Bitcoin is going to be, can Bitcoin, because Bitcoin usually pumps on the weekend. For the past 2 weekends, it hasn't. And if it can actually maintain some of that momentum this weekend, maybe we start to see a bit more excitement pop up back into Bitcoin. But right now, I don't know if we get there. Let's get some more coverage on Apple. Here's Gene Munster. He covers Apple pretty aggressively. Let's get his thoughts on if he thought it was a good quarter and what Apple's AI vision would look like.
And fast money friend Gene Munster of Deepwater Asset Management. Gene, your take on the quarter so far?
Quarter was a relief. Surprised to hear Tim, was thrilled to hear Tim give the guidance to Steve. That was rare, but the guidance for June, the revenue guidance was also relief, essentially in line with the street, up 1.5% is probably where it's going to fall out. So that stuck out to me. And I think the near term, I put that through the end of the year, we have a business that was down 5% in the March quarter. It's going to be up a couple percent in June, about 4% in September, and 6% in December. And so you compare that to the last 8 quarters where Apple's business has been down negative 0.3%. And so you see this kind of return to growth. It is comping off an easier iPhone cycle. So that was my biggest takeaway. And Dan pointed out something that is at the back of my mind and top of my mind going into this call. They did say that Dan mentioned that correctly, as Tim Cook mentioned something in his prepared remarks so far on the call, that they're going to be making significant investments. And significant investments, we saw what happened to Meta with that. In my view, more spending on AI infrastructure is a positive, but that is what I'm eagerly waiting for on the call, is to hear how that spend is happening. So those have been a couple things that have pointed out. One more, Melissa. When we're trying to guess what they're doing in AI, what that's going to be about, Tim mentioned in the prepared comments that privacy is going to be one of their kind of foundation pieces. And that's important because it's a sign that they probably want to pursue a plan in this agent-based or agentic AI, personalized AI. This is you prompt it and it goes out and does a series of tasks for you based on a single prompt. Pretty exciting stuff. We may or may not see that in June, but I think that that's the kind of their long-term vision related to AI.
Let's say
I think he's correct. That's going to be the long-term vision for AI, this kind of genie in a bottle, right? In your phone that you can ask to do anything and it does. I'm just skeptical of like how valuable will that be? Again, theoretically, this sounds good. Like, oh, you have this personal assistant in your phone, but so did the Vision Pro and no one used it. So again, I'm just asking myself, what is the real use case of that? Apple right here up 7%, S&P up 1% before we get super, super excited that that's going to be the next level of growth for Apple. And so we're going to have to see how that plays out. Enovix right here. Again, these guys had a monster run the other day. They're up 7%. Wow. Up 8%. They were up 45% yesterday, up 8% today, up 53%. Volume 1.79 million. Market cap 1.73 billion. Again, they signed a deal with one of the leading smartphone OEMs, likely Samsung. So that's probably why Enovix is getting excited, or the market's getting a little bit more excited for Enovix. Michael Schaefer says, I'm thinking I could turn my Vision Pro into a museum piece. Ironically, Palantir's version of the Vision Pro in terms of their IC2 headset is way more exciting to me than the consumer use case of the Vision Pro. So, there are enterprise use cases of it, but I don't know if that's a massive business. John says, why won't Apple just make a deal with Palantir? It makes sense to me that any other AI company, privacy, access to KLMs, the ability to build an ontology based on personal usage. It makes sense, kind of, but what I understand KLMs is more so in the context of enterprise data. I don't think of it as like the data on your phone. Now, maybe there's a use case for KLMs on the consumer side, and like AIP for the consumer, which the Apple could or Palantir could license to Apple. But it's a stretch because Apple would not partner with a company like Palantir just on the optics of it, but also they would not partner with it because I don't think they would want to trust a different type of AI infrastructure than their own internal proprietary one that they would build. Coinbase now turning green. Especially because on a consumer device, our phones, our messages, our history, right, all that stuff, they would have to have some really robust security. Now, I think Palantir could build that security, but I don't think Apple would allow any other company to take advantage of that besides themselves. But I guess we'll see. I mean, it would be interesting if Apple announced a partnership with Palantir. That would be insane. Cloudflare as well. They're down 15%. So the reason Cloudflare is down, they increased revenues 30% year over year. So at first glance, you would be like, okay, the company increased 30% year over year. Why is there a reason for this thing to sell off 15%? Their profitability last time this year, they had a $38 million loss. Yesterday, they reported a $35 million loss. So they barely have increased earnings per share, and it's been 365 days. Now, Cloudflare, obviously, they have a lot of different expenses, stock-based compensation. They're a growing SaaS company, so they could argue, hey, we don't need to be profitable right now. But in this market, with interest rates the way they are, not being profitable and having a year to try to get to at least break even and not being able to get there, the market's going to punish you for that. And so that's why I think we're seeing some downside momentum for Cloudflare right now. So that's what we got there. Let's go to the earnings we had yesterday. So Amgen, this thing is up 12%. This is a biotech company. I know June has a lot of this one. So this one did very well, up at $313. Incredible. Big Bear AI, meme stock AI name, that's down 13%. Texas Roadhouse had a great earnings. They're up 5%, which goes to show it's not food and beverage that's struggling. The consumer's not struggling. Starbucks is just too expensive. That's the reason why Starbucks went down, because Texas Roadhouse, Chipotle, and Domino's are going up. Fortinet down 5% on cybersecurity growth that was lacking. Monster's up 1.2%. Monster's earnings kind of signals that Celsius's earnings might not be that bad. They increased sales 12% year over year, which is pretty aggressive, dude, for a company that's as saturated as Monster is in the energy drink sector. $56 billion market cap. So, I mean, I think we'll see some momentum for Celsius if Monster's energy drink momentum is growing as much as it is. But that was good for Monster. Mercado Libre up 10%. They deserve it. They beat on EPS. They beat on revenue. They beat on total payment volume. They beat on GMV, gross merchandising volume. They beat on everything. So Mercado Libre, absolutely. Latin America seems to be an incredibly growing sector of the broader economy. They deserve to be up 11%. And then Square up 5%. Good earnings. The Bitcoin buyback, I think, was the most interesting, but nothing like, not a phenomenal quarter or anything like that. Up 5%. DraftKings, their earnings, I thought this thing should be like $50. I mean, they were profitable. They announced a profit for the first time in history, and they're still growing at like 60%. So they announced, I think, 3 cents a share or something. They are finally profitable. but the market just didn't care for DraftKings. So these guys are up about 1.5%, and then Apple here up 6.3% off of a good earnings as well. Am I saying Amgen wrong? Amgen? Dude, you can't expect me to say Amgen correctly if I can barely get the word of the day right. It's going to be hard to get Amgen or Amgen, whatever it's called, correctly. But it's up. So Amgen. Oh, like generation. Okay, see, if you guys said it like that, that would be easier. See, the generation made it very easy to say the word Amgen. Sometimes we need to spell it out for me. When does Powell speak? Is Powell speaking today? I don't think Powell speaks. Today. You better, dude. We don't need Powell to speak, dude. He already said enough. He said good stuff at the FOMC. Let him keep saying it, and let's move on, dude. Let's move on. Okay, let's get an update here on iPhone sales in China. Everyone was saying that iPhone sales in China were declining, and they did decline, but not as aggressively as we thought. Here we go.
Shares are up this morning, rising nicely, up almost $11. The company reported, though, a 10% drop in iPhone sales. That's about what was expected. Also announced plans to buy back $110 billion of its stock, the largest in corporate history, not just Apple. Joining us now, senior IT hardware analyst at BofA Securities, Wamsi Mohan. Wamsi, at least what's being written today is that the results, even though there were some negative numbers in terms of growth, that they were better than what the street was expecting in general. Same for what you were expecting?
Yeah, Joe, thanks for having me on. Look, I think that it's really interesting to see these results because, first of all, I think they delivered on everything that people could have asked for, right? On China, there were a lot of fears going into the quarter on China. Frankly, we did not see any evidence of order cuts in the supply chain, which we were calling out all quarter long, that we have not seen these order cuts despite all these China fears. And sure enough, Apple actually announces that they grew iPhone sales in China. So I think that's the first thing that people got wrong. The second thing was gross margins were quite strong, right? Third thing, buyback was up massively. And lastly, when you think about generative AI, they did drop these tea leaves that, look, there's a lot coming over here. So really, in some ways, a much, much better than expected sort of result and guidance.
And again, the China sales did not slow down as aggressively as people thought, right? They did slow, but not to the levels that people thought, which is why it's pumping. If China went down as bad as people thought, I don't know if the buybacks would have saved them, but China actually wasn't that bad. It was bad, but not that bad. And China's a big market for Apple. And so it seems like and if the next iPhone is the upgrade cycle, so far right here, 723 up 3.3%, maybe that's going to be the thing that saves Apple and China, and they can weather through the storm while they're doing buybacks in order to subsidize the time they need to eventually get to growth. SoFi 722. The question here is, can SoFi get back to the 750s and then eventually get into the $8 range? Again, I thought SoFi earnings were good. I thought the call was very depressing, but nice to see it pumping. Bitcoin right here, 61,719 as well. That's not bad. Again, the job numbers this morning, that was really good for the broader markets in general and for liquidity and for just rate cuts. So Bitcoin right here, 61,700. Robinhood 1809, Coinbase 230. Robinhood earnings is also May 8th. So that's going to be on Wednesday next week. So their earnings people might pile into the stock just before earnings as well. Yeah, Wednesday. So Palantir's on Monday, Robinhood's on Wednesday. Wow. This is going to be interesting, dude. Next week's going to be wild, bro. Next week's going to be wild, dude. 10 years at 4.5. Oh boy, that's great. 10 years coming down. Yup, there you go. Look at that 10-year. Look at it fall. This is what we need. This is what we needed. Yeah, those jobs numbers made it very obvious that a cut should come within 3 to 4 months. People were saying a couple weeks ago it's going to come in 2025. No, it should probably come in 3 to 4 months. The 10 years reflecting that. We're seeing it getting bought up, which is why the yield is going down. This is all because of unemployment. Correct, Adam. This is all because of unemployment. Everything. And Tom Lee, you got to give him credit. Yesterday, he literally said if there's even a slight sort of level of weakness in unemployment data, the Fed's going to get more serious about cutting. And the market is perceiving that to be the reality. MicroStrategy up 8.28%. If anyone got the MicroStrategy dip at $1,000, You're up $200 in basically 2 days for MicroStrategy. So that's not bad either. CleanSpark, look at that, up almost 9% just off the Bitcoin run at 61,000. Pretty amazing. Pretty amazing. Several rate cuts are well past due. Yeah, I mean, look, I do think the Fed should not make the same mistake that they made many years ago with inflation by not hiking quick enough. I think they should cut quick enough before things get nasty. But they need that inflation data to come down to really aggressively show that it's worth it. And I think it will in the next 2 months. I think it will. And at least it'll warrant a September cut, if anything. Robinhood right here, $18. Palantir, 23.42. So Palantir getting eaten up on the dip. It fell to like 23.03 from 23.50 in the pre-markets. Now back to 23.42. I do think people could pile into Palantir right before Monday. Monday is going to be their earnings. So now granted, it's after hours, so people might buy in during the day on Monday as well, right? But I could see some FOMO happening later today. MicroStrategy at 1,000 was getting silly. Yeah, and the reason it was getting silly is because if you believe in Bitcoin this year, then MicroStrategy, you have to believe in that as well. And so, I mean, could Bitcoin have gone to like 50,000, 48,000? Sure, but like it got beat up a lot, dude. And there are people that want cheap Bitcoin, and Bitcoin got beat up pretty badly. So it was bad. It was due, I would imagine, for a little bit of a bounce, and that was the signal to buy MSTR. At 1,000, it was almost reduced. It was almost on par reduced premium. Yeah, yep. In regards to its Bitcoin holdings, that is correct. And again, they had a good Bitcoin development day. I watched a little bit of it, and Saylor was just saying a lot of stuff around how companies need to be thinking about Bitcoin. Here's my thing. I think Apple, if Tim Cook wanted to have some fun, I think Tim Cook should have said, "Hey, we're putting $1 billion into Bitcoin." I think that would have been super funny, dude, because basically it would have been something innovative, which he has not done in a while, right? He hasn't been that innovative, and I think one Bitcoin is worth more than one share of Apple in 10 years. Buying a share of Apple at 3 trillion, I mean, even for it to get to 6 trillion, 10 trillion, so much has to happen, so much growth, so much progress. Bitcoin to get from 60,000 to 200,000, 180,000, it's not that crazy, bro. It's not that crazy. Not that crazy at all. June says I'm up like 18,000 on the day. I'm happy. Not bad at all. If anyone wants to put in the chat how much they're up on the day, today is a bit of a green day, so people should have some green on their portfolio. But yeah, like would you buy one Bitcoin or one share of Apple over the next decade? Like, gun to your head. No, seriously, that's a good question in the chat. Gun to the head. If you had to buy one share of Bitcoin or one Apple, one share of Bitcoin or one Apple, one share of Apple or one Bitcoin, what would you buy for the next decade? I would, Eeyore says, I remember using the same argument against Bitcoin. Yes, but that was in the context of SoFi, Eeyore. I said SoFi could 3x before Bitcoin. Now I don't know if SoFi is even going to go up like 3%, to be honest. But I remember that argument. That was SoFi. That wasn't Apple. But I definitely use this argument the other direction. Bitcoin, right? Everyone would buy Bitcoin. Right? It's so obvious. Like, who in their right mind would buy a share of Apple and hold it over the next decade over a Bitcoin? Like, it has to be obviously Bitcoin. So if we all think that's obvious, right? And we're all some smart people, I'm what? Tim Cook can't put $100 million into Bitcoin of Apple's, like if you really listen to Michael Saylor and what he talks about in terms of toxic assets on your balance sheet, a lot of those toxic assets end up being bonds, ends up being, short-term money market funds. It could end up being just pure cash that gets inflated away. You could put it in gold, but gold doesn't appreciate at the levels that you need for a corporate balance sheet. Like, Bitcoin accelerates. I think it would be Bitcoin. I think Bitcoin is, and Apple just has to put a little bit, not a lot, just a little bit. It doesn't have to be $1 billion, dude. It could be like 500 million, just something to signal to the market that, hey, we are trying to diversify our balance sheets. Like, do we really think the iPhone 57 10 years from now is going to be, the thing that gets Apple to gain more momentum? I don't know. But I do know the Fed's going to keep printing, and if the Fed keeps printing and M2 supply goes up, Bitcoin's going to go up. Michael Wilder says people who like security. Okay, I get it. But like, is it that secure to think Apple's going to be around in 10 years and they're going to be executing at the level they are right now? I don't know. Bro. I don't know. I think one Bitcoin over Apple is it makes sense. Muhammad says, bro, Amit's voice reminds me the guys from Rush Hour. Yo, shout out to Rush Hour. Rush Hour is like a great film. Poets down 7.59%. This is the stock that ticker symbol U was pumping, right? It was fucking Poet. It's some penny stock. Yeah, I dude, it's down 8%. It's up though. It was at 72 cents in December. Now it's at $2. I don't know anything about this company, but this one is it's in the semiconductor space, I believe. Michael says, I don't know many people who want to give up their Macs or iPhones. Yeah, I mean, I agree with that. I just think in terms of, I wouldn't give up my iPhone for anything. Dude, I have literally had an iPhone since 2010. I got an iPhone in 2010. I was in 7th grade and I was begging for an iPhone. And I got like the 3GS. I got like the reduced version of it. And then finally I got the iPhone 4. And then I've had an iPhone ever since. And those were the days where you could get an iPhone for $200 because if you signed up with AT&T, you don't have to pay the whole $1,500. You could get a 2-year contract and you could get the phone for $200. So it wasn't like breaking the bank or anything. It was just a question of if my parents trusted me with an iPhone at that age. And when I got the iPhone, I realized there's a search engine on the iPhone. And then I also realized in my hands, I have access to search anything in the world on this iPhone. Because before that, I had like a Nokia that really didn't have a search engine or a browser. And when I realized I could search anything I wanted on this phone, I really realized the benefit of having an iPhone. I mean, I really realized the fucking benefit of having an iPhone. So that was, and ever since then, I've never left. So it's like, I don't think I'm going to give it up in 10 years. Unless like the Vision Pro takes over or whatever. But I do think Bitcoin will still be more valuable than Apple in 10 years. Thank you guys for the happy birthday wishes. It really means a lot to me, even though it's not my birthday. At this point, I'm like 45 years old, given every single day has been my birthday. Thank you, Alan, for the $2 super chat. I appreciate it. It's not my birthday, guys, but I appreciate it. I got the iPod Touch in 2008, the original one. Yeah, I think my sister had that one as well. And I used to love playing on that as well. But the iPhone was a game changer, dude, in 2010. I still have notes on my phone from notes that I wrote back in 2010. Because like it's just like I've never left, right? It's always stayed synced. Dude, at one point I had messages from 2010. I had to delete messages. I was like, all right, I probably shouldn't have messages from 2010. But I've had so much on my phone. Okay, no, I don't have anything from 2010. Do I? I have stuff from 2017, though. I'm looking at notes. Do I have something from 2010? Notes on my iPhone. No, nothing. Oh, no, I do. Yo, look at this. You guys aren't going to believe this. You guys are not going to believe this, dude. You guys are not going to believe this. Look at this shit, dude. You are literally not going to believe this. Okay? This is from October 27th, 2010. Look at that. How can I show it? Okay, look at this. October 27th, 2010. Look at this. I got an iPhone 4. You see that? This is the note. I got an iPhone 4. That's crazy, bro. That's literally me time traveling. I'm like looking at myself from the past. And this is, okay, this is how you know. This is how you know in 2010, I was, how old was I? 13. This is how you know in 2010, I was 13, okay? So this is a note from 2010. You see right under 2010? Look at what it says. Look at this shit, dude. This is how you know I was from 2010. Hugh Jass. Hugh G. Rection. Like this is dude, in middle school, this is what we were saying, bro. We were telling people this is the stupid shit we were doing. If you guys get it, you probably get it, right? If you read these slowly. This is how you know I had an iPhone in 2010. And I was like, oh, I'm gonna get my friends with this stuff. I am Sofa King. We Todd did. Some Ting Wong. Dude, this is hilarious. This is crazy. These are memories, bro. This is back from fucking middle school. Now, someone says in the chat that the jokes have not changed since then. I think that's pretty mean because I feel like the jokes have gotten exponentially better, dude. It's been 14 years. So to say that Hugh Jass is the same type of jokes that I made, is the same level of jokes I'm making today is a bit disrespectful. But it goes to show you I was always a funny guy. It goes to show you I was always a funny guy. That's it. I was a funny guy. Okay, let's get back to the market. Let's see what else do we have going on here. So again, I think I would buy Bitcoin over Apple over the next decade, but we'll see how it plays out. Enphase up 9%, S&P up 1.17%, SoFi up 2%, Tesla 183. Robinhood 1802. Nvidia 883. Wow, Nvidia is $16 away. Nvidia 16 Dolores away from 900, Brody. 900. Not bad. Not bad at all. Violent candles on SPY. Yeah. Pretty aggressive candles on SPY. 510, 93. Wow. S&P's trying to get to 511 at this point. S&P to 511. Okay, cool. Also, we got a money market update. Let me show you guys this right here. I showed this yesterday on the market close. If you were not here, then you didn't see it. But money markets have increased by money markets have increased by how much? By 23 billion. So now we have 6 trillion in those money market funds. 23 billion was added, and it makes sense. We'll see if that decreases over the next weeks as jobs reports came out today that indicates a rate cut might be happening sooner than later, which means if that's the case, then maybe we'll see a decrease. But again, still 6 trillion on the sidelines, dude. We get that first cut or the first resemblance of a cut. That money is not going to stay and get an average yield when companies are doing amazing. Nasdaq's up 2%. Look at that. Yeah, if the Nasdaq's up 2% and you're getting 5 in one day, and you're getting 5% in a year on this money market fund, you're not going to stay in the money markets, dude. You're just not going to stay there. You're not going to be there. QQQ 1.75 right now. Yeah, there you go. There you go. Also, Turkey's inflation rate is up to 69.8% on the day. Whereas, so that gives you some context that if, Turkey has hyperinflation happening, the United States is at, 3.5%, 3.6%. We should be able to get it back down to 2%, right? The United States economy should be more resilient than what's going on in Turkey. So, in the context of the overall world, we're not in a horrible spot. We just have to keep getting to the, and that just goes to show you how good the American economy is. Like Bitcoin right here, 62,000. Like literally countries are doing 70% inflation and the United States is just trying to get below 3%. Now we could get complacent and we could say, oh, well, 3% is not that bad. But Jay Powell really does want to be adamant on inflation at the end of the day. And I respect that. And I think if he's doing the right things, we're going to get to 2%. And then, the market's going to reciprocate because we were disciplined enough to actually get to those levels. Bitcoin right here, 62,000. That's helping the miners. CleanSpark's up 8%. MicroStrategy up 7%. And then Marathon here up 5.6% on the day. Coinbase still down. Coinbase, that 10% rally was probably baked in and just not being able to get a ton of momentum. Okay, so here's what we're gonna do. We're gonna watch. We always do Q&A on Friday, so we'll do Q&A after the as soon as the market close is done. We're gonna watch one more thing that I want to show you guys. Dan Niles, who runs the Satori Fund, he's been historically very bullish or bearish on Apple. I want to get his bear perspective on Apple, and then after we watch that, we'll be done, and then we'll be done with the market open, and then we'll just do Q&A. But I do want to get the bear case because he's been short Apple for a while. Apple's obviously up 7%. So let's see what his perspective is on Apple, and then we'll keep going from there.
Niles, investment and management founder, is here. He's it's all about tech, and you like to own some and you like to short some, and we want to hear about that. But I think you've got some comments about Apple. It's up this morning. It's one of your biggest holdings long, isn't it, Dan?
Correct. It's my second largest holding on the long side in terms of single stocks. And I think when you look at Apple, it has a pretty consistent pattern in the sense that people always want to get excited in front of new products, et cetera. So I don't think investors are going to focus on the fact that revenues are down 4% year over year. And the fact that over the last 3 years, they're only up 1%. And you compare that against the Magnificent Seven, revenues are up 42% year over year, and they're up 86% year over year over the last 3 years. And if you go out to even 5 years, the Magnificent Seven revenues are up 275%, and Apple's only up 56. So no matter what time period you want to look at this, the stock on a revenue growth basis has underperformed. But for investors, there's always the hope that there's a upgrade cycle coming or there's some great new product. And what you have coming in June 10th is the Worldwide Developers Conference. And the hope is that they're going to put out stuff on AI, and that's going to drive revenue growth and an upgrade cycle. And so we think the stock will trade up into that. And then eventually you're going to get to whatever the reality is in terms of, does that actually happen when they actually go out to sell these new iPhones? Much like you saw with the Vision Pro, where nobody's really talking about that anymore, driving revenues.
Right. So even though, as you state here in the notes, that stocks in the short term trade on things like that, investor belief, sentiment, not necessarily fundamentals and valuation. I'm sure you pored over the details of Apple's report anyway, even though that might not be, what causes the stock to move today. So in there, if you look granularly, what was not as bad as people thought?
Well, what was solid was services that did well, and Macs did well. If you look at it, iPhone still came in a little bit below expected. And I know Apple's trying to talk about mainland China, but they report China, Greater China, and that was still down 8%. And so there's no way you can look at this report if you look at what they guided to, which was originally revenues flattish versus last year. They reported down 4. Apple probably has one of the best investor relations teams on the market because they managed to get all the estimates down between when they originally gave guidance to now. And so, they came in and it looks like they got to the numbers, but those are the pieces within that. But remember, there's some pressure on the services side and that we've got this government lawsuit going on. So we'll see if they have to unbundle what Google pays to them, which is a big portion of the services profits, et cetera. So there's some risk to that going forward. So from a longer term basis, we still like the other the other names in the Magnificent Seven. So specifically Amazon, which has tremendous profit growth, Meta, Microsoft, so NVIDIA, obviously, on the AI side. So those are the ones that we'd be more focused on the long side.
You own all those. You own all those, and you like all of those fundamentally. Long term, you like all those better than Apple.
Long term, correct. Near term, Apple, I think between now and June 10th, when they have their AI event, it'll probably outperform because people yet again are going to be hoping for an upgrade cycle coming.
Can I, let's say that I don't know where the market's going, so I'd like to maybe have a short position in something in case, I don't know, in case the NASDAQ comes down. What are you short? Anything?
Oh yeah, I mean, Tesla is a name we're short again. We've got other shorts. I mean, shorts for your viewers, I mean, they're incredibly dangerous.
Yep.
So if you're doing,
It's interesting because Dan was actually short Apple a couple months ago. It seems like they covered that short and now they've gone long, but they were short Apple about 2 months ago.
single stock shorts, you better really have a good grip on this and also manage the risk where you're covering and you're re-engaging, because stocks aren't generally, they don't go to zero, right? But I think if you want to hedge the market, you're better off doing a broader based short position around things like the S&P 500 or NASDAQ. I mean, it may surprise some of your viewers, but NASDAQ is up less than the S&P so far this year. So there's a group of names where profits are surging, such as an Amazon or a Meta, et cetera. And then there's another group like an Apple or a Tesla where, they're just not growing right now. And so that's where you need to kind of get a lot more selective. And so this is a great environment for a stock picker. It's a horrible environment if you just sort of have a big picture view and you just throw money into the market, I think.
So I think he's right. They're still short Apple and Tesla, but they're long-term still bullish Apple in general. All right, markets are getting hit right now. And the reason markets are getting hit right now is because of this data that just dropped. So ISM services PMI in the US dropped from 51.4 to 49.4. Huh. Wow. This is the first contraction in services since December 2022. Below 50 is always a contraction. Above 50 is an expansion. So the market was expecting 52. The market was going to think this was going to expand. This actually contracted. Wow. The reading aligned with an unexpected contraction for manufacturing, indicating that the higher borrowing costs from the Fed may be having a higher impact on business conditions. Well, that's what the Fed wants. They want higher rates to have a impact on business conditions. Isn't that good for disinflation? Yes. Technically, yes. That's good. Services going into contraction is also disinflationary. That is correct. Which is why I'm wondering, why is the market down on that news? Like, look at Bitcoin, just dropped aggressively. Robinhood went from 1810 to 1782. All the Mag 7s just dropped. Dude, that's so weird. We got unemployment data, and the unemployment data basically signals that people are getting less jobs, which isn't great for the consumer, but it's great for inflation. and the market goes up. Then we get ISM PMI services data that says, yeah, inflation probably is going to continue to come down because we are contracting versus expanding in regards to services. And the market like goes down on that. Where's the S&P? S&P fell down a little bit as well. S&P was up at like 511. Now it's at 510. It's so interesting, dude. It's so interesting. Lee Allison, another sign that rate cuts should have already been made. I agree. Another sign, 1000%, that rate cuts should have already been made. 100% agreed. But it's interesting, isn't it? Like, it's like leveling out. Like that ISM, look at the S&P now falling below 510. That ISM data is absolutely bullish for inflation or for disinflation. That's so weird. And then they go up on unemployment, but they like that should be two pieces of data that's signaling to the market, hey, rate cuts are coming. New orders rose at a slower pace, 52.2 versus 54 in March. Output was softened, 50.9 versus 57.4. Wow. That's down 700 basis points. Driving firms to shed jobs at a faster pace, 45.9 versus 48.5 to mark a third period of lower employment. This is so interesting, dude. This should be super bullish for inflation. It's not great for the economy, but it's great for rate cuts. And that's why I'm thinking, dude, 2024 is like, we'll get a cut. The market will go up. You'll be able to make your money. And then within a couple quarters, earnings will fall off a cliff. And then you don't want to be in the market. And I think, unless AI is as transformational as like beyond our wildest imaginations, it's kind of easy to see what would happen. Like market's going to pump on the rate cut. Everyone's going to get excited. Stocks are going to go higher. That's when you sell. And then rates, as rate cuts continue to happen, that means there's a ton of, weakening in the economy. We're going to see a ton of PMI contractions. We're going to see a ton of employment go higher, right? Probably from 3.9 to like 5% around that range. If the Fed has to keep aggressively cutting. And that's when you want to be out of the market. So it's not that crazy to see the timing on this. Now, if AI and then NVIDIA's demand probably has to weaken up a little bit by then, right? Unless AI is just, AI everywhere and the demand's never stopping, then maybe that keeps carrying the market. But that theoretically, we could see how the market falls after that first rate cut. Google down 2% today. Google down 2% right here at 165. Bad GDP plus lower ISM, maybe recession. Yeah, I just think that recession would happen after the rate cut, not now. It's actually not that crazy, dude. Obviously, no one knows what's going to happen, but like historically, the market doesn't do well after the first rate cut, but the time leading into the first rate cut, which is where we're in right now, actually does very well. So I guess the question is the Fed going to be as lenient? And will they actually execute at the level that people think they can to kind of let that story play out? Palantir at 2309 as well. Palantir falling. Wow, that ISM data really tanked the market. We were having a good Friday. This is why you can never trust Fridays, dude. You can never trust Fridays. Just can't trust them. You expect Fridays are going to go well. You get some great data in the morning, and then an hour later, you get smacked in the face with other data. What would it take for Coinbase to go to 370,000 Bitcoin? Probably like 80,000 Bitcoin, I feel. Because we did 75,000 Bitcoin and it didn't get to 300. I think 80,000 would need to happen. There needs to be a lot more momentum in retail for Bitcoin for that to happen as well. Benny says the day rate cuts are announced, it's going to be very interesting. Or so many people have been assuming that it's going to be good. It could be a sell the news. Yeah, it could be sell the news, dude. Imagine we cut rates. The market's like, oh, well, wait a second. That's not good. That means the economy's slowing down. Sell your stocks. And then this whole like 2-year cycle we've been on to try to get this elusive rate cut. We get it. And then it's nothing. It would be crazy, dude. What's going on with PayPal? I don't know what's going on with PayPal, dude. PayPal, it's stupid that it's down 2%. They had a phenomenal earnings. I think the market's just a little scared of buying them. And maybe they're scared for some competitive reasons. I don't think that's a good argument. Maybe they're scared because the macro is not the best. That could be an argument, but then that's macro driven. That's not really PayPal driven. PayPal should be $75. There's no reason PayPal should be stuck at 65. There's no reason. But yeah, the earnings definitely didn't justify to be down 2%. I don't think it justified to be down 2%. And you could say there's more competition, but dude, they beat revenue estimates by 3%. Like that's not easy to do. They're buying back 7% of the entire float. Like I don't know. I think PayPal should be fine, but we'll see. We'll see what happens. Okay, cool. So that's it for the market open. I guess we're ending it on some sad ISM data that technically is really bullish, but it's not bullish. We'll do Q&A for like 10, 15 minutes, and then I'll get you guys out of here. We got Palantir earnings on Monday. We can talk a little bit about that, but yeah, there you go. That's what we got on the market. PayPal added Solana. Wow. That's interesting. Did not know that. Did not know that. I mean, I know a lot of people don't really buy crypto on PayPal, but it is something that, you know, is a good feature to have. And their stable coin is going to be a new innovation. They're doing a lot of things in crypto, just not like a lot of things that's going to get the market super, super excited. At least not compared to like Coinbase or Robinhood yet. All right. Let's do word of the day, and then we'll do Q&A, and we will be done. Can't you? It's kind of crazy that it's Friday, right, guys? Like, it's really Friday. It's just like Friday, May 3rd. We're in the 5th month of the year, and it's Friday. It's just things are going by quick, dude. Okay, this word is really interesting. Did they add dog with hat? They did not add dog with hat yet. Even though Robinhood in Europe added dog with hat, but Coinbase did not add dog with hat. Neither did PayPal. This is an interesting word. Skip lagging. Wow, there's no audio this time. Yo, that's weird. There's no audio on this one. We'll never know how this one sounds. There's no lady to say the name. Skip lagging. The practice of purchasing an air ticket for a flight with a layover at one's true destination, getting off at the layover point, and skipping the last leg of the flight. I don't think anyone has ever heard of this word, dude. No way. No way. Skip lagging. The practice of purchasing an air ticket for a flight with a layover at one's true destination. So let's say I'm going to California, okay? The practice of purchasing. So I buy a flight to go to California. There's a layover at California at getting off at the layover point and then skipping the last leg. No, let's say I'm trying to get to California, but at Arizona, I have a layover. So I go to Arizona. Oh, and then I don't go to California. So I skip the last leg of the flight. So I go to Arizona and then I just chill in Arizona and I don't end up going to Cali. Skip lagging. People do this because it's cheaper. I've never heard of this shit before, dude. There's a website for skip lagging. Dude, I'm about to look this up. Skip lagging. Yo, that's a real thing. Skiplag.com. What? Skiplagged.com. Okay, I guess this is a thing. I've never heard of this shit, dude. I've never heard of this. People can do it because it's cheaper. I've never heard of them. That's the dumbest word I've ever heard. I have never heard of this. Okay, I guess we got some skip laggers in the chat. I thought it meant like slacking when I heard this word. I was like, oh, are people slacking or something? Interesting. Skip lagging. This is so funny. Skipping the last leg of the flight. All right, well, that's the word of the day. I'm Beneficial said, no, it's like if you want to go to Cali, but buying a flight that first goes to Cali and then Arizona, but ending your travels on the first stop of the two legs. You can get in trouble if you do it repeatedly. Yeah, it's definitely not the most ethical thing, I guess you could do. Wow, there's a whole website for this shit. Skip lagged. See, this is the cool stuff about word of the day. You really find out new concepts. Like, I never knew this was a thing, dude. I don't think I've ever done this either. I've never skip lagged. Ramos says do it while traveling to India. That's hilarious. I am going to India in October, guys. I'm excited to go to India, dude. I'm excited to go to India. India's going to be fun. Robin at 1790 right now. Market's recovering a little bit, but still red. India's going to be fun. I'm going to have to do the market open at like 7:30 p.m. my time in India, which is going to be kind of weird because like for you guys, it'll be 8:45 a.m. For me, well, let me check. 8:45 a.m. EST to India time. So, 6:15. So basically 6:15 to 8 o'clock every day in India, I need to keep free to do the market open. And it'll be the same time. It's going to be weird, though, at 6 p.m. to look at the stock market, like, and how it's going. That'd be kind of wild. That'd be wild. But that should be fun. So that's going to happen in October, and we will keep the show alive and keep it going. All right, let's do Q&A if we have any questions. Any opinions on DJT? Look, I think DJT actually could rally if Trump wins. I think it's very possible, but I think it's going to dump eventually, and it's going to dump pretty aggressively when it does dump. Company's worth $7 billion, $3 million in revenue. They don't even do an earnings call. They don't report daily active users. I mean, like, it's obviously a joke. We know it's a joke, but Trump's using it to his advantage, and you can't blame the guy for using it. If people are buying it up to support him, you can't blame him as well. Look at SoFi falling right at 7. Sucks, man. Sucks. Not cool to see that ISM data really messed it up. But again, I think DJT will eventually crash. The question is when, and if he wins the election, then maybe it's not going to crash. Your opinion on DraftKings after earnings? I thought DraftKings had a phenomenal earnings, dude. I thought it had a great earnings. I understand why the market maybe is not that excited about the guidance, but they're profitable and they're growing like crazy, dude. DraftKings is one of the only online betting marketplaces that I know that has a real brand. I mean, I know there's FanDuel and some stuff like that, but I don't do online betting, but there's a huge market that does. And DraftKings is a brand leader in that space. Now, granted, it was at $15 and it ran to 45. It's up 3x over like the past 18 months, 20 months. So I do understand why it's hard for it to keep going higher. Look, it was at 74, dropped to $9. Sorry, in 2022, 9 to 42. It's up basically 5x. So it's not that easy for it to keep running, but they're putting up the numbers. It's not crazy to see them continue to put up numbers. Opinion on Ripple. You know what's so funny about this? Steve just texted me this video the other day, and he was like, hey, I need you to watch this thing about Ripple. And I was like, Steve, I'm not watching anything about Ripple. I'm sorry. Like he sends me these videos all day, and I feel so bad I don't watch it, but like, I don't want to watch it. Like, I just look at this. He sent me this 8-minute 47 video. He wants me to watch this thing. XRP will reach 15,000 because of Bank of America. I'm not watching it, bro. I'm just I think one time I lied to him too. He's like, did you watch it? I was like, yeah, it was a great video. He's like, what'd you think? I was like, well, the guy was like really smart with this. He's like, you didn't watch it, did you? I was like, nope. I didn't watch it, dude. I didn't fucking watch it. I'm sorry. It's like I'm disappointing my dad, dude. I didn't watch it. CMG split. I think it'll be good for CMG, but it's already up 30% year to date. So I don't know if the 50-1 split is going to necessarily help them too much. It already has done it's already, wow, 3,100. So year to date, Chipotle year to date, they're going to be $50 a share. Chipotle year to date, let's see. CMG, it should be up 35%, right? Year to date, yeah, 38%. Yeah, so I don't know if the split will help them more, but 38% is pretty incredible for Chipotle, dude. Bill Ackman has to be loving that this year as well. Many YouTubers get hacked and promote Ripple. Yeah, I think Ripple, the benefit to it is just like it's a faster blockchain. That's my understanding of it, but I don't care, dude. I don't give a shit about crypto. I just want Bitcoin to go up. Like, I'm not that deep into caring. Now, Solana catches my attention given what people are doing from a decentralized finance perspective on their blockchain, but in general, dude, I'd rather analyze equities than analyze crypto. But Bitcoin is exciting enough to analyze, and Ethereum. But all these little small ones are just like, they've never been that interesting to me. Granted, they can still run. They could run aggressively. They're just not the most interesting. At 50, more people will buy, I guess, because of affordability. Yeah, I mean, that tends to happen. There'll be a lot of people that'll ape into Chipotle at $50 because they think it'll be a good deal. But I mean, it's already up 40% year to date. I don't know how much of a deal that'll be. S&P still at 509, up 1%. But people definitely will probably buy a little bit more. You know what? MicroStrategy should do a stock split. MSTR should do a split. Because I think it's not that easy to want to buy this thing at $1,200 a share. But if this was like, they do a 10 split, if this is 129, I think more people would be interested. I mean, the options market would explode. There would be way more people wanting to get in. And then $129, it kind of feels like, to the average person, maybe that's relatively cheap if that's exposure to Bitcoin, even if it's still expensive because it trades at a larger premium to Bitcoin. So if anyone should do a split, I think it should be MicroStrategy. Amit, do you have any plays on Palantir earnings? I actually don't, dude. I don't have any plays on Palantir earnings. I'm just going to let this one play out. I think earnings will go well. Again, I did my earnings video on Daily Palantir a couple of days ago, so you can watch that. But I think earnings are going to go very well. I don't know if the macro is going to respond positively. Like some people think Palantir is going to break through $28 and it's just going to be like this glorious earnings and it's going to be incredible. I think there's a chance that happens. I also think there's a chance it has a great earnings and it just stays flat and or goes down because it's just not the right macro for it to be moving higher, right? So I don't know. I really don't know. I do think earnings are going to be great though. There's not a doubt. Wow, Palantir is below 23 right now. There's not a doubt in my mind that earnings, that they're not going to beat on revenue, EPS, customer count, all that stuff. They're going to beat those metrics pretty aggressively as well, in my opinion. And maybe announce something special, right? Maybe announce they did some buybacks. Who knows what they announced? But I just don't know if the market's ready to give them this momentum yet. And then again, a lot of this, remember, Palantir is before NVIDIA. And if NVIDIA messes up, which I don't think they will, but I don't know if the market's going to give Palantir a 30% premium if they've not given NVIDIA a premium yet, right? And so maybe they're going to have to wait until NVIDIA earnings before they start buying up Palantir. But I do think it'll be good. I think 26 is also very possible. I think that could happen. The problem is if we get to 26, 28, my question also is how sustainable is that? Because we saw that happen with 27.5, right? On the Titan contract. And then that thing just, it collapsed pretty aggressively from there. So the other thing is how many buyers are willing to pay at 27, 28. And I think we're going to have to see. It really is how good are these earnings, dude. If they announce some ridiculous numbers, then there's going to be plenty of buyers at 27, 28, 29. There's going to be plenty of people willing to buy. But if they don't, if the numbers are okay, I don't know. And if it runs to 27, I don't know if there's enough people willing to buy. I mean, if they show like crazy commercial growth, like it's just numbers that are undeniable, then yes, there will be buyers at those levels. There's going to be buyers no matter what. At those levels, there's going to be less buyers unless the numbers are amazing. And so we'll see. But I overall think it can do, like Ramu says, it can go to 28 and then stabilize at 24.5. I think that's very possible as well. I think that's super possible. And at 24.5, it'll still be up 45% year to date. Still at 23, it's up 35% year to date, right? We still had a phenomenal year. So just got to see how it ultimately plays out. Michael says there's a chance we pop above 30, but I think we could pull back to 28 range by the end of May. Yeah, I think that's possible also. I think 30, dude, if we pop above 30 after earnings, how much of a move that would be? That would be, so from here, 30 minus 23 divided by 23, that would be a 30% move. It's not that crazy. We did 30% last time. Not that crazy to say we could do that again. I mean, it just really depends on those numbers. It really, really does. Savachi says, well, the good thing about military and government contracts is that the small cap companies are getting the majority of the contracts, cutting out the middleman companies. Yep, that is also true. And that's good for Palantir. We did 30% last time. Yeah. And we got to see if it could continue to hold that level. Again, the problem is if it gets to 30, where's NVIDIA? Where's Tesla? Where's S&P? Because if those haven't caught up, I don't know, right? I don't know if they sustained it. The S&P was in a good position when Palantir pumped to 23 in February, and you could justify that. Now you could argue that it's kind of fairly valued and maybe even undervalued. But if the S&Ps are like 495 or 500 and Palantir's at 30, there's just no way that would be able to happen, right? Palantir cannot be at 30 and the S&P's at 499. Like it's just not possible. So the macro does have to hold up for Palantir to maintain momentum as well. Regardless, I think the numbers are going to be good, and forget the stock, right? And this is what I keep trying to tell myself, is that the stock is whatever, dude. If we're in this for the long term, forget the stock. If it does go down, like we get cheaper shares, I'm convinced that this company is the largest moat on the planet. By the way, we'll play this right here and then we'll end it off. Karp did say the company could be 10x bigger or 20x bigger in this interview thing that he did yesterday at some like dinner conference thingy. Let me try to pull it up. I think Palantir Research posted it. Is this here? Or someone else posted it. The audio is not the best on it. It's like a weird squeaky audio, but he did say, yeah, the company could be much bigger than what we think it is right now. Yeah, I think Palantir Research posted it. Let me play that one. S&P rebalances in June next, I believe. June next. Oh, okay. Palantir Vision also posted as well. Yeah, it's this entire. Yeah, here's like. Look, here's the first couple of seconds of him saying this.
When we meet again in 10 years, I think we will be 10 to 20 times bigger. I think there's a link between disrupt.
There you go. So there is an argument that, hey, maybe Maybe this thing is going to be much bigger than what a lot of people are projecting, right? I mean, look, for him to say it's going to be 10 to 20 times bigger, that's pretty damn exciting, dude. That's pretty damn. I'll put the video in the chat for anyone who wants to see Carp from Palantir Vision talk about that. But like, now we just got to see if the numbers can justify it. All right, that's it for me. Thank you, everybody, for being here. I'll be back on the market close, 3:45 p.m. We got jobs data that was good. We got ISM data that was good, but the market's not interpreting that as good. Friday tends to be a sell-off. We'll see if this Friday can hold on. Market's kind of recovering a little bit. Robin at 17.99, Palantir 23.24. We'll see how this plays out in the next few hours, and we'll go from there on the market close. Palantir Weekly, again, will be tonight at 11 p.m. Or actually, no, it's not. I don't think we have Palantir Weekly. Yeah. We don't have Palantir because Arnie's traveling today. So we actually don't have Palantir Weekly. So market close will be the last time I see you guys later today. All right. That's it. Thank you, everybody. I'll see you guys later at the market close. If not, then I'll see you on Monday for Palantir earnings. Have a good one. Bye, everyone. Good night.